Welcome to the Mining Store podcast, Australia's #1 crypto mining rig solution provider, covering the latest news and insights into macroeconomics, cryptocurrency markets, altcoin news, and technical analysis. And now, without further ado, let's hand it over to the miningstore.com.au team.
G'day guys, welcome back to another market update podcast by Mining Store, where you have a few quick changes that we're going to be having over the next 2 weeks to the structure of our podcast. The first one is when we do our market update, we're going to be leaving a stock list there for you guys. It'll be in the description of the video on YouTube. You can go and visit that at any point in time, and I'm going to run through that stock list on this podcast. And you'll be able to see basically all the prices that we have available and the deals we have available for miners. The second update is next week, we're actually going to be doing a new segment. And in that segment, basically what we're going to be doing is looking at interesting topics and cryptocurrency projects. So we may be looking at some, high gaining projects in the past 2 weeks when we do that segment. We may be looking at some projects that haven't done well, some projects that have some interesting ideas, break it up a little bit. And therefore, the standard market update that we do is going to be every second week now. This week's going to be the standard market update. And to kick things off, we're going to go straight over to Taylor, who's going to go through some community questions and some really interesting stuff surrounding some altcoin miners there.
Yeah, so I guess something that we've been asked numerous times over the past sort of fortnight, I guess, is Bitmain releasing the new KA3 miners. If you haven't gone and checked them out, I definitely recommend going and have a look. They're probably the most profitable miner that Bitmain's released in some time, just in the sense of their ROI. It's sitting around sort of the 6-month area at the moment. So this is mining Kadena. It's not something that sort of we've dived too deeply into. Previously, Gold Shell was sort of the only main producer of Kadena miners. I guess to put it into perspective, the best Gold Shell miner previously was, I think, 40.2 terahash. And Bitmain has just come out with their first one at 166. So, yeah, it's not really a subtle upgrade, I'll put it that way. Gold Shell is probably kicking themselves in the shin. But it'll be interesting to see, obviously, when these come out in December, how everything goes. But we've had, obviously, a lot of people contacting us, not even necessarily just buying them, but just interest in them. Personally, Theo and I have had a lot of people ask. We've sort of had to dive deeper into it ourselves to try and obviously understand behind the project, as well as its profitability and its prospect going forward. I guess in the sense of where I've sort of gone with it, with some of my clients getting a handful. I guess the basic fundamentals of it in that sense is right now Kadena is about 90% down on its all-time high. So it's sitting at around $2.25 Australian. Previously, it was sitting at around 24 earlier this year. So it's obviously had pretty significant drop, much like the rest of the market. But I guess the main talking points of it that clients will be wanting to know is in relation to its ROI and its profitability. At current price of where everything stands, it's making around $3,200 a month in profit. So hugely profitable. Like, yeah, can't get much better than that.
It's a bit like we're talking about it earlier to mining ETH in 2019 almost.
Yeah, exactly right. We were saying like this is a glass shattering moment in the sense of where you look at things in a different window. I guess the main focus of like, just to break it down, I've got a client who has gone ahead and purchased 2 of these. Say at current price right now, he's sort of pulling in roughly 38,000 profit a year of 2 units at current price. If it even gets back to halfway of where it was, he's looking at $152,000 profit per year. So it's an insane prospect.
It leaves you open to some different mining strategies as well, right? We talked about pre-podcasts. You could have a strategy where you really back Kadena in and you're just mining it and you see long-term value and you're holding that Kadena for long-term. You could see a strategy there where you sell 50% of the Kadena you're mining because the daily in US dollar value or Australian dollar value that you're mining is so high. With that amount that you sell, you could sell it into Bitcoin, and hold that long term, or you could sell all the Kadena you're mining daily and put that into Bitcoin, and that would be what we call indirectly mining Bitcoin. So there's a lot open there. Taylor, what would you say in terms of clients that are, maybe got no miners? Could this be a good start place for them? Do you think it's a better one for people that have a few Bitcoin miners already? Or do you reckon it's a bit of both?
I think going into it with a strategy in the sense of how you're going to protect yourself. Obviously, I think any altcoin mining, when you aren't exposed yet, has risk. But if you can take 50% or 60% or however much and either put it into Bitcoin or take it out and cash out and make sure that you're profitable, it's unlike it's the same as any other investment. It all has risk. I think if anyone's mining Bitcoin, you should be looking at these. Realistically, it's like having two to three Bitcoiners miners profit per year. So I think realistically, what was the breakdown? I think it was every 2 days of it mining or 3 days. That's your month's power bill. So
hugely profitable. Obviously, it comes with a bit more risk as well. But just with the thing that I usually I don't fancy the altcoin miners too much, but this one did grab a couple myself as well. And the reason why I kind of like it a little bit more is because even in such a low market, the daily return can be so high. So I look at it that if I can sell that that daily profit into so many different things that I think are going to increase in value over time substantially. So really cool little gem that's come up. Obviously, like anything, don't go too hard on it, but might be worth getting some exposure to, especially if you've got a few miners already.
I'll just say one thing that for anyone else that doesn't know anything about it, it is a layer one. Layer one. It's not like off any other BSC or anything, or ETH or anything. It is its own blockchain. So that, and I think the other interesting fact is it's run by two sort of ex JP Morgan Stanley people. So they do two valid points.
I think it's similarity to Bitcoin as well.
Looking into, and obviously do your own research.
Yeah. I think the second point that you said there is the only probably reason that I have a little bit more confidence on this one over others is, it's backed by a big company there. I don't feel like it's going to disappear in a month's time. I'm going to be left with some coin I can't get rid of. And anything potentially has a bit more value coming up. But great talking point. Was there other community questions, Taylor, or is that?
To be honest, they were all related to this. all eyes on you. But pretty much the main question was, should I be doing this over BTC? What is Kadena? All that sort of stuff. So if you have any other questions, please feel free to shoot them. I'll be talking about Kadena probably for the next 2 months.
Unreal. That's good. And yeah, really enjoying those community questions. We will jump in next. I'm going to go through a bit of a stock update. And this is, I suppose, that newish section to the podcast that we want to go through each week. So basically, I'm going to put the link to the stock list on our website in the description of this video, and you'll be able to see everything that's available there. But at the moment, we have been struggling to get larger quantities of the S19 and S19J Pros at the prices that we've been offering for the past month or two. So they're becoming fewer and harder to get. But we do still have some at these prices if you're looking to expand. So we were able to get our hands on only 17 of the S19 Pros at the lowest price we've seen in forever, I think, guys. 5,700. Yep, lowest we've ever seen.
So
yeah, exactly. It's pretty much the price that the J's were at, but you're getting an extra 10% hash rate at the 110 instead of the 100 terahash. So that's really awesome. I suspect they'll probably be gone late next week, maybe even this week, who knows. I don't think they'll hang around for long, but if you're watching this and you're looking to get set up, I'd say that's probably your best bet there for the Bitcoin miners at the moment. On the stock list, you can go and check it out on the website. You'll see we have around 16 of the hydro miners left. I don't think we're going to be getting any more of those until maybe January next year. So definitely that's probably your last opportunity to grab those. We believe they're going online around the 9th of this month. So great opportunity for you if you're looking to get the most recent release from Bitmain, which is their S19 XP Hydro at 198 terahashes. Outside of stock and what's been happening there, we have had a bit of an increase in the hash rate, pretty much on the back of those XP miners being released from Bitmain. I would say most of them have been delivered. We've definitely received our package and just setting up the last bits of the transformer to get them online. So that's probably why we're seeing a big increase in terahash. Thea is going to comment a little bit further on some projections that we are going to see by the end of the year later. But we're at around 240 exahash now, which is an all-time high. And we will obviously see a bit of a difficulty increase as well on the back of that. So I suppose that poses the question, and Thea's going to run through it, as why are people still buying so many miners when Bitcoin's price is so low, Thea?
Oh, it just comes back to like, obviously, considering the market is low, it has two things. It means that miner availability, we have, like you just said earlier, we've got S19 Pros to sell. I think the key thing to note is, especially for people that haven't been involved in the space before, to get an S19 Pro, or which will most likely be an XP or anything in this next run, is going to be extremely difficult. So you're probably more than likely, if when the market's back up in a bull run, you're not going to be able to get those machines, and you're going to be most likely getting some even less terahash or secondhand miners. So that's why we're seeing a lot more sophisticated investors or even seasoned miners buying equipment purely because of the price of the units. And even with that, what you're talking about, the hash rate, the expectation is sort of towards the end of the year, which seems like we're on par with that, about 250 exahash, which is another 10. Obviously, a spike like what we've seen recently. It seems like it's going to probably stabilize towards the end of the year, and people's purchasing starts to taper back around that Christmas time anyway. And then just finally, I guess with all the on top of we're going to fares and stuff, we'll discuss it, but like considering where we are with even the central banks raising interest rates, and then at some point they may pivot, but if you consider the RBA right now, they'll have an interest rate decision now, November, December, then they have don't have one in January. But probably the inflation numbers may change, and they might pivot towards the early start of next year. So and if that does happen, we're going to see not only the hash rate go up, but the price of probably Bitcoin and all other asset classes start to move. So in my opinion, I think getting equipment is probably, is the best advantage right now, is getting in at what, $5,700,
Yeah, it's really a case of kind of laying the foundations now for future growth. Often, and we saw it last bull market, we get so many calls and people coming up, I'd love this miner, I love that miner, I'm willing to pay whatever of a price, because the dollar per day value that they're mining has gone up. And unfortunately, at that stage, there's no stock available, and the prices are twice as high, if not 3 times as high. So lay the foundations now. Don't worry about daily returns. Start mining, and then obviously you're actually holding a decent amount of Bitcoin by the time the price actually goes up as well.
And I think the other thing, lastly, is if you think about it, the people that also bought equipment since the start of the year for those higher prices, even if they were to part ways with some of their machines in the secondhand market, they're probably not going to part ways with them, even with the current price of the new ones now. Like if they bought them for 15 or 20, and then in a year's time, and we potentially see the next run or whenever that may be, then you're probably not going to sell them at the cost that we're selling them for right now either.
No, definitely not. That's a very good point. That's awesome. All right. Well, I think where we'll go now is we'll hand over to yourself, Tony, get a bit of a global market update, and then Mitch is going to finish us off with the fundamentals and technicals for crypto.
Sure. So, I mean, since our last podcast, a shit ton has happened in the markets. So quite a bit to kind of go through. I'll try and keep it short and sweet. We've been watching that parabolic rally on the DXY over the past, since the start of 2022. We've now kind of tagged a major rising channel trend line. So we're seeing some selling pressure coming into the market. But what's kind of driving that is because central banks are slowly together, all pivoting to some degree. So the Bank of England was forced to pivot last week. So they've turned the printing press back on. They've started printing money again. However, they're still raising interest rates at the same time. So they're raising interest rates to combat inflation, which was a result of printing money. But they're also printing money, which is probably going to result in more inflation down the line as well. But they had to turn the printing press back on because the pound crashed last week. And it was to do with some of the policies that the UK government were looking to implement. There was like a lot of unfunded tax cuts, and a number of pensions were going to liquidate, and they were facing margin calls. So the Bank of England had to come in to bail them out and start printing pounds again. Similar scenario in Europe is happening with energy companies and with pension companies. The Bank of Japan had to step into the market a few weeks back as well because of the currency devaluation. So this kind of pullback on the dollar is really speculation that the Fed is going to pivot soon. So we're seeing quite a speculative play on the dollar index, some weakness coming into the market. But I do want to kind of clarify, the Fed hasn't pivoted, and they're still expected to increase interest rates by 0.75% early November. So this is purely speculation. Hopefully it's a top in the market. It looks, on the monthly and the weekly time frame, it looks like a really juicy short on the dollar index at the moment. So, it looks good. But I do want to kind of clarify, nothing's been confirmed by the Fed. They're still looking to raise rates in the next meeting. So it really depends on data, unemployment data from the US over the coming weeks, inflationary data as well. If we do see US unemployment creep up over the next couple of weeks, that may give the Fed some ammunition to ease back on the rate hikes. But, if unemployment remains strong, they're going to have to keep hiking. So, we've seen a major rally or rotation out of the dollar index into equities, into risk assets. We really think cryptocurrencies, or I think cryptocurrencies and commodities are really the big play here. So gold and silver, cryptocurrencies as well, because the distrust in the fiat system paired with money printing as well globally. So I think they're your two major plays over the next year. If we just go down to the chart on Mitch's report, there's a chart of the US equity market throughout October. Now, October is actually generally a really good month for equities historically. What we generally find is a rally early October, a dip into the 6th and the 7th of October. The main reason behind that is because a number of options expire on the 7th. So that increases volatility. You generally see a dip around the 7th and then a rally coming out of the 7th into the end of October. So this month is generally a good month. The interest rate meeting from the Fed isn't until the 2nd of November. So we may get that speculative play that the Fed is going to pivot throughout October, and then we may get slammed lower coming into November and December. So, be aware this bounce, it's a speculative play for the time being. It could be another dead cat bounce, but fingers crossed that the top's in for the US dollar.
Yep, I think we're all banking on that, and good luck to everyone during Pumptober.
Yeah, that's it.
It is officially
October,
isn't
October.
it?
Yeah.
Absolute official. Now, awesome update there, Fez. As you said, just jam-packed since the last update that we had, and some interesting stuff that we probably no one expected to happen with the pound there. Might be a good time to head home. See the fam.
Well, we actually on the Monday we actually transferred a lot of money back to the UK and saved ourselves. Made about 10-15% since then, so that's pretty good.
That's unreal.
Yeah,
well done. All right. Well, any comments on that, guys? Or we'll hand over to Mitchell for the crypto fundamental and technical update.
Yeah, so just touching on some more fundamental stuff. I wonder if you guys have an opinion, particularly you, Tony, on this, but just with Credit Suisse in a bit of trouble at the moment. I think it's cast a bit of a shadow across not only kind of what it relates to, but all financial markets really, representing a bit of a Lehman Brothers moment. But we've seen their share price kind of slash 56% this year. It's wiped over $10 billion of value, but yeah, I think there's a lot of people globally a bit worried right now with
Mm.
bonds and whatnot, and there's a lot of growing uncertainty still. But
Mm.
yeah, I mean, just something to touch on. Then just moving on, Kathy Wood's ARK has offered to offered crypto strategies to investment advisors. Obviously, as cryptocurrency retail traders, we actually do primarily want as much institutional money to come to the market. So it's really good to see that something as big as ARK is offering up different investment strategies for
Mm.
cryptocurrency, because this is kind of gone on from just separately managed accounts to to meeting the needs of financial advisors and wealth managers. And if that comes into the world of crypto, then I guess the sky's the limit, really, isn't it? So
Yeah, 100%. It's good to see that happening.
yeah, there's just some other general fundamental points here. You guys can pause and take a read of. They're just short sentences on movements around the world. Um, but yeah, that's there for you. Just moving on to some technical analysis now. Just off the back of Tony's talking about the DXY, you can see visually here that we've come back down close to that 110 level of strong support and resistance that comes from that 2002 top. We kind of, as you can see, have kind of bounced off it for the time being. I haven't got a live chart of the DXY with me now, but yeah, it's just trading just north of that kind of resistance that flipped to support, but hopefully this can break down and it can provide a bit more relief in the cryptocurrency market. But I did want to show a bearish bat harmonic. It's a similar technical idea to Ether BCC that I've been showing for those Trading Academy members. But it is a reversal pattern, and this one, funnily enough, fits very well with the weekly chart for the DXY. So hopefully, as you can see from the bottom of this chart, this isn't a chart to play out over the next couple of weeks. It's to play out over the next 3 to 5 years.
Mhm.
As the start of this harmonic actually dates back 20 years ago. So
Wow.
yeah, you can be doing harmonics on the daily or the weekly, but yeah, they can go back as far as 20 years, funnily enough. So yeah, hopefully we continue to see reverse on the DXY, particularly in the long term. I think this fits very well in with what Tony discussed about relief going into next year for commodities and for cryptocurrencies as well,
I'll
particularly.
just add on that, Mitch.
Yeah,
If the dollar index doesn't reverse, there's going to be carnage everywhere in the markets.
yeah,
We're seeing the bond market getting absolutely destroyed. We're seeing economies around the world getting destroyed. So if the dollar index doesn't reverse soon,
yeah.
we're going to be in for a crash landing.
Yeah,
Mm.
it's funny enough you say that because like I had someone ask me, what's the worst you see it, and your first kind of point of call as well. Obviously the 120 area from 2002 19, late 90s is okay. You go back to 19, I think it was 85 or 75, and the DXY was 160. And I had someone ask me what happens if we get to there, and I didn't really have an answer for them. I said I think the world might end if the DXY is
Yeah,
at 160.
I
So
think I think if it gets there, that means Putin's launching a nuclear
yeah,
embargo. But
Yes,
yeah, I think
someone.
it's more the speed of which it's going up. So the dollar
yeah,
index can gradually go up over time, but it's more the speed, the velocity, and how quickly it's
yeah.
rising, which is causing damage everywhere.
Yeah, of course, and we have shown that parabola that's kind of occurred over the last year or two,
Mm.
as it has kind of up. So hopefully that gets broken and then it can come down equally as fast, hopefully. But we'll have to wait and see on price action. But we'll look at Bitcoin. To those members, I sent this out yesterday, Arbo, I believe. But we are testing that really important long downtrend from the 69K app back in November of 2021. We have been testing it, and it is, slightly broken through for now. We don't always want to get euphoric and say we've broken the long downtrend of the last year or so and that we're about to moon, but it is a positive sign. It can be a fake out, but
Mm.
alternatively, it could be an idea for a bottom locally. I mean, we've in other podcasts we've dived into the hash ribbons, the pure multiple, a number of even the pi cycle bottom. A number of these things pointed to that 17.5k or so wick being the bottom. And if we can break this downtrend as well, which fits in with the DXY reversing, and obviously even Tony saying the potential for next year for commodities and cryptocurrency, well, potentially we do see a bottom here for the time being. and play out potentially our Bitcoin harmonic ideas as well, which members have seen before we see a reversal to kind of lower prices. I mean, it's something to keep in mind and something I reiterate a lot. You know, just because we rally from here doesn't mean officially this is the bottom. We can always see higher prices before we see lower. So
100%.
something to keep in mind. All right, now looking more locally to price action, I mentioned a few times throughout the last week on this local price action that flipping the point of control at this lower area of price, flipping this to support would actually be a really bullish thing for the time being. As you can see from the chart, we did flip that to support and since retraced to the golden pocket, which is a really key area of interest. Because just above that at the 20.7k level, I feel like if we break above this range and above this level, that it could actually present a really bullish scenario that fits in kind of what Tony said with the DXY and commodities and cryptocurrencies getting a bit of relief away from the stock markets and whatnot. So, you know, if this does happen and we do see a clean break above 20.7k, I can see us then visiting the 382 retracement, which is around the 22k area. And this would be really good signs for things like our longer term plays, such as the harmonic ideas I've sent out. But yeah, that's for Bitcoin. We'll move on to Ethereum now. This is a chart I sent out recently to members at the start of the week that looks at a parallel descending channel. It has a few key areas of confluence that I just want to talk about quickly. We have the bottom wick of this parallel channel that perfectly lines up with the 786 if you pull the fib from this pivot low to the pivot high. And then obviously I've commented here that, you know, if we claim the golden pocket as support, we can actually look to then claim this wick and this level of resistance. Then we can potentially head up to the top of the parallel channel, which would be really good for Ethereum, as that places it, you know, in the 1450 to 1500 area. And we've clearly got some, well, members of the trading academy have got some nice entries on ETH, so would be good to see that. I did want to make mention that, you know, if we do bounce to the top of this parallel channel, that actually, if you pull the fib low, fib high to this fib low, that it lines up with the golden pocket retracement here. Plenty of confluence there. So, you know, for those in the short-term market, maybe there's a potential shorting idea here with invalidation. And for those holding ETH, you know, if we do hit up, you probably can expect some strong resistance at these areas if we do get a nice little rally. But yeah, obviously we'll have to wait and see for price action on mainly the DXY and Bitcoin to kind of determine areas of the market elsewhere. But, you know, for now, signs are looking good. We've held that strong support from the prior 2017 ATH and obviously the prior consolidation to the run-up, and we're holding really good levels at the moment. But that's it for today's technical update and fundamental and minor update. We'll be back obviously next week with a new segment that Will mentioned, and yeah, we look forward to that. Do you got anything to say, Will?
No, it's a jam-packed episode. I actually like the 2-week break. We got a lot of fresh content in there, as Fez said, heaps happening in the global markets and some really interesting times for crypto as always. But yeah, next week I'm really looking forward to the new segment. We'll have some topics that are, you know, contemporary and relevant to what's going on at the moment, and then a couple of projects that we're going to deep dive into. So we'll see how that goes, and we'd love to hear your feedback on it. But thanks again for tuning into another episode. We'll be back next week. Thanks, guys.